The speech title is Financial Risk. Financial Risk. Solvenda Nagendra Bharat.
Thank you, Toastmaster of the Day, Toastmaster Raja Balaji. Excuse me, let me attend this call. Yes, Nagendra Bharati here. Oh, is this from XYZ Bank? Okay. Yeah, I have an SBI account with you. Yeah, 1 lakh balance is there. So what? You want that? Why? Oh, you want to transfer that balance to investment account so that I can get some more interest. Is it right? Okay, what type of investment? Bond. What? Bond. I like only James Bond. What? What else? Equity? No, I like only green tea. What happened? That person hanged up the call. Anyhow, my dear Toastmasters and guests, you do receive these type of marketing calls from banks. These banks actually, they want to manage their financial risks in such a way so that they can convert the short-term deposits into long-term funds to make more profit. That is why he asked me to convert my savings bank deposit into a long-term fund like bond. So these are all the financial risks encountered by bank. I am taking this subject from the perspective of the bank, not from our perspective. Our financial risk is limited to only these online games, right? Their financial risk is a vast subject. They have credit risk, market risk, operational risk, liquidity risk, leverage risk, lot of risks are there. Now let me take a simple example to cover all these risks. First of all, let me define basic banking. Banking is nothing but borrowing from one person at a lower rate of interest and then lending to another person at a higher rate of interest. So the interest differential is the profit for the bank. That is simple banking. But what happened over a period of time, these banks, they get into a lot of complex products. They want to make more profit. They combine insurance, investment, lot of things into the savings bank and all these deposit accounts. And they make a lot of complex products. So at the end, they also get into a lot of complex financial risks. Initially, it was only credit risk. Then slowly it has gone into market risk. Take this example. For example, if you want to get a loan from a bank, you go there and get a loan. But if you are not repaying it, what happened to the bank? That is called credit risk. That is called default risk. You are defaulting in your payment and they get a credit risk. What do? Because as I already explained, they borrow from somebody and lend it to you. So the person who lent this bank, if he comes to the bank to get back that money, what do if you are not repaying? They go to the market and get at a higher rate of interest. They borrow at a higher rate of interest. So in that way, they incur loss, right? So that is a credit risk for the bank. Some banks, intelligently what they do, they want to convert that credit risk into market risk. They bundle all these bad loans. I was not repaying, right? So that becomes a bad loan. They bundle all these bad loans and securitize this and then lend it to and then sell it to another bank. So this is the way they transfer the credit risk into market risk. This another bank, they sell it to another bank. Like that, these international banks, they sell all the securitization products among themselves and it becomes a global crisis. This bank, which originated this credit risk from my loan into a market risk, what do? They, in their balance sheet, if you see, there is a big mismatch between the assets and liabilities. The liabilities are more than the assets. So that is called liquidity risk. And if you see the balance sheet, their capital position, capital is the owner's fund, right? That is very much less than the assets position. That is less than 2%, 3% of the total assets. So that is called leverage risk. They leverage the small capital into a big loans and security. So leverage risk. And in this process, they want to convert this risk. They want to hide all this risk inside the balance sheet. So they get the help of auditors and manipulate the balance sheet. That is called operational risk. And during this process, there are some agencies called credit rating agencies. They are the watchdogs. They carefully watch all these banks, what they are doing. They have the system called rating system. If they give triple A plus, it's a good bank. If they reduce it to single A plus, they become a bad bank. They reduce the rating. So what happened? When they go to that market to get the money, because of the reduction in the rate, the banks are unable to raise the funds. So that market risk became a great risk. That is what happened in 2008. You would have heard about this Lehman sister or brother. No, sisters, they are very affectionate, right? Obviously. But these brothers, they get into some clash. This is Lehman Brothers, correct? But initially it was started by Lehman Brothers and then it changed so many hands. This bank, this investment bank, which started 150 years back, in the year 2008, it failed because of this type of securitization. That was called subprime mortgage crisis. All these mortgage loans are bundled into securitization and then it became a security product and it went to so many banks and it becomes an international crisis. Many banks suffered. There was a recession in US. Our bank, fortunately, in India, Reserve Bank had got a lot of controls and we have escaped from that. But anyhow, this was the financial risk crisis. I wrote a poem on this. Default and degrade are credit risk. Position and price are market risk. Events and errors are operational risk. Capital adequacy is the temporary solution, but corporate governance is the permanent solution. There is a Basel Accord which says that the banks have to keep sufficient capital to manage this risk, but that is only a temporary solution. We need to have corporate governance. There need to be some ethical practice. So I gave a brief outline of all these risks to you by taking the simple example of we failing in repayment and how we get into that type of global crisis. If you want to read more, you can go to Amazon site and type Nagendra Bharati and get my business poems and read and get more knowledge about these financial risks. While sipping the green tea, you can take that. You can read that. I will also get some royalty. Over to you, T.M. Modi.